know your chart of accounts. You're probably like, know your chart of accounts? Yes, your chart of accounts is basically how you organize your financial books for your CPG business. Because at minimum, you should be tracking the following things. You should be tracking your cost of goods, which would be your COGS, which would be your ingredients, packaging, co-packing, all those things. You should also be tracking your marketing and advertising when it comes to influencer spend, samples, ads, and then you should also be tracking your freight and logistics when it comes to shipping, storage, delivery, and lastly, you got to be tracking your overhead when it comes to salaries, software, rent, insurance, and then don't forget, you got to make sure you're watching your revenue for all your income streams that are coming in. These categories will drive every decision from the beginning to the end when it comes to pricing, when it comes to profit margins, and everything else. So you got to make sure you're watching everything and you're keeping an eye on your chart of accounts, because this will help your CPG business go to the next level or crash and burn. Step 4, you got to track your COGS. Cost of goods sold. You always have to track your COGS because you got to know how much you're making, what you're selling, all that. COGS is everything you spend to make one sellable unit. Yes, whatever you spending to make it, you got to be tracking. How many you sell, you got to be tracking. Of course, this includes ingredients or raw materials. How much are you spending on those to make your product? And how much are you spending on packaging, bottles, caps, labels? How much are you spending on co-packer fees if you're not making yourself? And then how much are you spending on freight, labor, tied to production? All these things play a factor when it comes to your COGS and you're selling it. Because when you divide your total production cost by the number of units made, that's your unit cost, like we discussed in another video. Because this is how you'll set your pricing and calculate gross margin. We're in the business of making money, not in the business of losing money. You got to make sure that you're constantly keeping an eye on your COGS, because COGS equals total production. Since it equals total production, we got to make sure we keep an eye on our COGS and know what it's costing us to make it and how much we're making after we sell our product.